Welcome to Gold and Silver, Diversification in the Age of Uncertainty, featuring Wall Street Journal best-selling author Robert Wiedemer in Washington, D.C., and from the Monex Studios in Newport Beach, California, your host, Mike Maroney.
This is Mike Maroney, and I'm here today with Bob Wiedemer, the author of Bubble Economy, Aftershock Investor. And Bob is on all of the major financial news stations, typically giving his forecast as far as what sits out on the horizon. And today we're going to talk a little bit about this special index that Bob has created for Monex. It's the Uncertainty Index. And needless to say, there are a lot of different components to this Uncertainty Index. And what we do is when the index reaches a high, then normally the need for precious metals in individuals' portfolios has a tendency to increase. And I think when we look at the events that have taken place over the last 6 months, the political situation in Washington, the geopolitical situation around the world, the overall circumstance as far as sovereign debt is concerned, the problems with pensions throughout the United States, there are a lot of potential black swans that sit out on the horizon. But let's talk to Bob a little bit about what he thinks. And Bob, I'd like to start off with something that I kind of caught this weekend on one of the news stations, and they were interviewing Condoleezza Rice, and she was talking about how the American population doesn't realize how major of an event this North Korean situation is. Can you kind of fill us in on that a little bit, please?
Yeah, well, I agree with her. I'm not an alarmist on the foreign policy issues, and I don't think she really is either. But I have to agree, this is a big change. Let's take a look back at it, Mike. When's the last time you remember a country getting both a nuclear bomb and what's now an intercontinental ballistic missile? That was a long time ago. I mean, you're talking basically India, Pakistan, and even there, the missiles are not necessarily at this level. Probably now are, but not at the time when they got the nuclear bomb. And these countries are certainly much more antagonistic to the U.S. than India and Pakistan. North Korea has, certainly if George Bush called them the axis of evil, they've called us even worse. And in fact, they've said the sole reason that they built nuclear bombs and missiles is to protect themselves against the U.S. So they're very antagonistic to us. This is a huge change. We've really never had anything like this happen in decades.
You know, it's interesting because someone came out with some additional news on Monday that basically stated that one of the things that they're working on is the actual air system that allows submarines to shoot out nuclear weapons, where it pops it up with air pressure, and then as soon as it breaches the water line, then the power of the missile kicks in. And needless to say, if they have submarines sitting off the coast of California, that would really cause some anxiety. There's no doubt about that. So this in itself potentially could be an event, even if we don't see any major military activity, where it could move the price of not only the stock market, but also the precious metals market.
I think so, and the North Korea's leader tends to be somebody who makes very bold statements and threatening statements, and with an ICBM and a nuclear bomb, that's a big combination, makes a big difference, and especially since now it looks like their missiles probably within a couple of years will be able to hit Washington, D.C., where I am. Right now, it's just you, Mike, that's in trouble. But, pretty soon it's going to be the whole country.
Just another feature to living here in California. Now, Bob, we've seen a precipitous drop in the value of the U.S. dollar. It's tracked down from 103.5 all the way to 92.70 last week. Now, the Trump supporters are all basically saying it's because of the Democrats, and the Democratic supporters are all saying it's because of Trump. Do you see a specific reason why this is happening, and do you feel it could potentially continue?
Yeah, I think it will continue. You've got an issue here that, as they said, Trump is bringing on people who want to let Trump be Trump. I don't think that's going to change. I don't think it can change. He's not somebody who works together well with people. And I've said that before. He's been in the CEO role and he likes that. He's not anymore. He's in a presidential role. He really needs to be heavily a salesman. He's not, doesn't like to be. And he just likes to say what is on his mind. And that was part of the attraction. And I don't think that's changed. But I think it's going to be very difficult for Congress, and the fact that they've gotten, let's be honest, absolutely nothing done virtually in this first 6 months. Certainly, it's not just Trump, but he's part of the issue as well, and why nothing's happened on any of his agenda, and I think that's going to continue for a while.
Now, it's been interesting because typically, if you see a move of that magnitude as far as the dollar is concerned, it's something that maybe people will be talking about. But it's almost been somewhat of a covert activity as far as the sell off, where suddenly last week, when we dipped below a multi year low, people started talking about it. And now we have, the Fed in September, we have the debt ceiling coming up. And if they can't get anything done and they start raising rates, even though it sounds like it might be counterintuitive, that could really start to affect the dollar in a somewhat negative fashion.
Well, I think there's two aspects to that. One, you and I have talked about, is that nobody's saying much about the dollar. It is moving negatively, but I think it's a bit of a coiled spring. People are ignoring it because the market's been good, everything's fine, but it's already down a lot, and it could be down. I think it will be down even more, and I think it will, more importantly, pop on people's TV or viewfinder. They're going to see the dollar as being a much bigger issue. And yes, I do think the Fed will raise rates. Still, I think the dollar is, despite that, probably going to continue down for a while. And I think the Fed's going to raise rates. I mean, let's face it, the economy and job scene looks pretty good to them. And so I think, despite the fact that may seem counterintuitive, I think they're going to do it. When you talk about the debt ceiling, I think that's where the whole Trump Congress issue becomes a big deal. And in fact, I'm going to be talking to my friend from high school, who is a congresswoman now, and I'm going to be talking to her tomorrow. And part of what it's going to be about is how much of a problem are we going to be in on raising his debt ceiling. And I have to admit, I'm not very comfortable with what I've recently seen in terms of Congress and the president getting together, just Congress getting together. So we'll see. I think that has to be a real issue. Do I think they won't raise the debt ceiling in the end? In the end, they probably will, but it could be a scary situation for a while.
So we have the inevitable increase in interest rates. Potentially, we have quantitative tightening beginning in September. We have the stock market continuing to make new all-time highs. So we're not seeing much of what we typically see in that sector rotation because so much money has been made in the stock market. And I think until we get a major correction, we probably don't see the flow into the precious metals markets. But do you look at the stock market now and think maybe investors are looking at that as the safe haven?
Yes. Interestingly, though, if you look at the numbers, it's the smart investors who are going into the market as a safe haven. They can move out pretty quick. And what I mean is individual investors are not moving as much into the market. They're a little bit scared of the high prices, and they should be. And I think that's one reason gold has actually held up fairly well, even during this rally, when it normally shouldn't do as well. Gold's held up reasonably well, and I think that's probably because individual investor support is still there. And really what's supporting the stock market is, the big investors, and, that could turn on a dime. But I think the precious metals have a lot of potential now because more individuals could move out of the market and perhaps into gold. Partly, certainly, is, I think, a safer haven than bonds. And then secondly, I think that dollar fall is going to, hit their radar and start to bother them, especially if the stock market starts falling as well.
Well, there was an interesting statistic in Barron's this weekend. It talked about the valuation of the stock market in comparison to total U.S. GDP. And we had hit an all-time high in 2000 of 167%, and we're currently upwards of 145%. I think we're right at around 146. But back in 2009, we were down in the 50s. So we've basically tripled as far as valuation is concerned. So suddenly the Fed does start to tighten. We see a little bit of quantitative tightening. Obviously, that takes a little bit of fuel away from the fire. The political situation doesn't seem to support all of these new policies that are business friendly, and we see some sort of correction. It could literally cause that snowball effect, and the next thing you know, Dow could be down 10, 20%.
Yeah, and as you said, all of those underlying factors are what's causing that. Probably the biggest underlying factor is that everybody's so happy and giddy right now. Kind of reminds you of January 2000, February 2000, just before March. Nobody thinks there's any problem, but there's some fear out there. The individual investors showing that they're a little worried about these valuations. Doesn't take much to kick it off. Could it be a North Korea issue? Yeah. Could it be the debt ceiling? Could it just be this bull run has run a little too long, and it just starts to fall, and then maybe we don't get as many people diving in to buy, we get a few more people taking profits, then you got a real problem, and yeah, then the market drops 10-20% or more.
Yeah, the black swan you're looking at is typically not the one that bites. It's typically one that you didn't even consider. But with all the things that are out there and all the different variables and catalysts that exist that could cause some major issues as far as the stock market is concerned, it certainly would make sense to look at the precious metals market as a way to hedge your position, especially even if you're just using it as a non-correlated asset. Obviously, you talked about in your book Aftershock, I want my bubble back. And you went back and talked a little bit just a second ago about the 2000 mark and what happened. Do you see a lot of the same parallels today? And then inevitably that kicked off a major 9-year bull market in precious metals.
It certainly did, and let's be clear. Even this year, precious metals are still doing pretty well, and I think that's important to emphasize. So it's not just the longer term bull market, but even short term, we've done well. But yes, to answer your question, Mike, absolutely, I see the same things happening today as in 2000. Much worse though, a lot higher valuation, a lot more stretched. And of course, we printed a massive amount of money to get here, borrowed a massive amount of money to get here. And that's probably the scariest thing of all is that none of this stuff is coming from true economic growth that isn't really stimulus related.
Yeah, it's interesting because we haven't even spoken today about the sovereign debt issues. When you look at the European situation, basically the European Central Bank has accepted all of those bad loans or sitting on debt that's basically deteriorating very quickly. We have the problems here in the United States. And obviously that situation will inevitably come home to roost. Well, Bob, it's been really great talking with you. And obviously we're going to want to hear what your friend has to say as far as what she sees in the Beltway there in Washington, D.C., where everything seems to be happening, but nothing seems to be getting done. Hopefully you have a great week and look forward to talking with you next month. And hopefully our prospects and customers understand that Bob does put out a very special report each month. If you're interested in receiving one, absolutely free, give us a call. And Bob, great chatting with you.
Good speaking with you too, Mike. Take care.